Hey everybody, welcome to this free edition of our Trader User Group, a weekly roundup. This is for the trading week ending April 9th, 2021. I'm Preston Brent. Thanks for tuning in. This week's theme is the yin and yang of the market. So let's just kind of take a look at where we've been this week, see what's kind of cooking. So let me just switch the screen over here and let's come over here and take a look at the weekly sound bites here. And let's start with the index performance for the U.S. markets. You can see just about everybody had a great week. The only one that was really kind of going nowhere was the Russell for the week. It was basically flat, down just 1 basis point for the week, but essentially flat. The rest of the market had a really strong week, with the Nasdaq having the strongest week in quite some time, up 3.12%. S&P and Dow all making all-time record highs this week, as well as finishing strong in the green. If you look at year to date, the Dow is actually trying to catch up with the Russell. The Dow's up 10.4%. Russell's still up a little over 13.5%. And then, of course, if we look at the PE ratios, we can see there that everybody is still very richly valued. Still got a spread between the 10-year Treasury and the S&P of about 26 basis points. The VIX actually, the VIX actually closed the week at 16.69. So the current VIX is still down from even last week, having broken the 20 level. Okay, so it's coming in very nicely. And then, of course, if we look at the economic data for the week, as I said, small cap was kind of recorded a very, very small loss. We do see earnings kicking off next week. Q1 earnings are kicking off. We're going to have a lot of banks reporting next week. I think it really kind of goes really strong in the middle of the week. We got JP Morgan, Wells Fargo, Goldman Sachs. They're going to report all before market open on Wednesday. Let me just freeze my, hang on just 1 second. I'm going to mute myself for a sec. Let me just see here. What do we got here? Let's see here. All right, I'm back with you guys. Sorry here. I had someone knocking on my door there. But if we look at the week, for the earnings, we get JP Morgan, Wells Fargo, Goldman Sachs before market open on Wednesday. And then Thursday, we get Bank of America, we get BlackRock, Citigroup, US Bank Corp. And then on Friday, for the banks reporting, we get Bank of New York, we get Citizens Financial, Morgan Stanley, PNC Financial Services, State Street. So this is a huge week for bank earnings. Okay, I mean, just really a big week. Now, if we come over and we take a look at the rest of the market, or the rest of the planet here, or before that, let's just take a look at Treasuries for a second. If we take a look at Treasuries, and this would be U.S. Treasuries, they really fairly benign for the week, right? I mean, just really benign. The benchmark yield increased a little bit on Friday, but other than that, we did get Fed Chair Jerome Power Ranger Boom Boom Powell talking about the global economy still remaining a bit fragile. Yeah, we get it. All central banks are just putting tons of money out in the markets, and Janet Aunt B Yellen is, pitching her minimum global business tax rate, which I don't think it's got any legs to stand on. But we do see the economy in the U.S. really going very strong. I mean, the Labor Department reported we added about 916,000 jobs in March, well above consensus. February job openings reported last Wednesday up almost 7.4 million. It's the highest since January 2019. And I think some people were surprised when the jobless claims hit their highest level, which is about 744,000 this past Thursday. But most of the week's economic data was very surprising to the upside. The ISM gauge The services sector jumped to the highest on record. So, and we got the Bureau of Labor Statistics. The PPI data rose by 1% in March. That's roughly twice the consensus. So again, we're going to have kind of a yin and a yang of the markets as the markets are trying to do that battle between strong economic growth, very low interest rates, and yet inflation is holding in check right now. But I don't think that's going to last very long. And of course, if we take a look at the rest of the planet, let's go look at Europe, and then we'll finalize on China. But if you look at Europe, kind of a mixed bag. Well, actually, in Europe, it was fairly strong. The Euro stocks, which is the 50 largest companies across Europe, slightly in the green. Year to date, though, very strong. It's rivaling the U.S. Russell, up 12% year to date. The FTSE over in London had a very strong week. Year to date, up over 7%. CAC 40 in France up a little over 1%, 1.09. Year to date, 11.13%. And the DAX, the German index, up 84 basis points, up year to date 11%. So you can see Europe. I mean, from the London Exchange and FTSE, CAC 40 in France, German DAX, all up almost double digits for all of them. The FTSE just trailing just a little bit. Of course, last week, the Nikkei in Japan, Chinese markets, and the Hang Seng were all in the red. Year to date, the only one in the red so far for the major indexes is China. And I'll show you the chart, the tracking stock for China, the ETF. It's down about 18% from the highs. So that's the only one that's really kind of being a little bit weak here. But outside of that, we are seeing, and keep in mind, China is down because on the economic front over there, their services PMI jumped up to 54. That's the fastest expansionary pace since 2020, December 2020. Also, they had a very strong official PMI reading the end of March, and their CPI index rose to a 5-month high. Along with their PPI, as I said. So what that's done is it's put the fear of inflation over there, and the Chinese government came out and has talked about tightening the stimulus golden spoon, and that has weakened the markets. Now, is that a thing that we can expect here when Boom Boom Powell comes out and starts to talk about that? I believe for sure. When's he going to talk about that? Well, I think the markets are going to force his hand. But first, I want to just kind of show you some of the market action in the charting, and then we'll wrap this thing up. So let me just switch my screen over here. Let's come over here like this. I'm going to show you the Nasdaq Composite Index. You'll see on this. I'll let it hit the screen here real quick, and then you can see that we're not at 2021 highs on the Nasdaq Composite, right? You can see the last all-time high was middle of February, but you can see this huge bounce off of the closing price of last year. So we're well into the green, as I mentioned. Okay, but now what I want to show you are those Nasdaq companies or those tech companies that are doing very strong. If we look at this FANG index, and I've also included in here Microsoft and Netflix, but it also has Facebook, Apple, Google, and Amazon. If you'll look on this chart, you'll see that this index customized here on eSignal is at all-time highs. All right. So these stocks, and I've told our members, you want to be long these stocks. I think they're going to blow out earnings in Q1. I think earnings are going to be a big blowout. As I told our members last Sunday evening, these are the highest revisions that FactSet's reported for Q1 earnings, upward revisions in the history of FactSet. Now, granted, we're coming off a year-over-year comp of Q1 of last year, very poor. Doesn't matter. Markets are in a very jubilant mood right now. But look at these stocks here. Now, if we come over and we look at the Nasdaq 100 futures, it's not going to be as strong, right? But we're coming up near the all-time highs, which was, again, the same as the Nasdaq Composite. Very strong. I suspect this week, once we get the bank earnings, they'll probably blow themselves out of the water. We'll be back up over 13,900, and we'll be well on our way. Now, if we look at the If we come over here and take a look at the E-minis, you'll see also new all-time highs right into close. In fact, we had a strong closing finish. No divergences on the MACD. Okay, so I'm expecting the highs to continue. Um, as I've told our members. Now, I've been telling our members that we're going to get anywhere from 41 to 4,300 before the end of the year. I have also been saying we're going to have a pretty good little pullback sometime in the summer months. All right. Last year I called it in July, August, but we didn't get that pullback until September. It was about a 10% pullback. This year I think it's going to be stronger than 10%. I think we're going to get a 12 to 15% pullback, but then I think we could have a strong finish to the year. But I've been calling for 41 to 4,300. Now we may hit the 4,300 sooner, and then we won't see it again for the rest of the year. But right now, the charts seem to indicate you want to be bullish, all right, going into these earnings. So this is the E-mini. Now, I will show you the Russell has been trailing of late. Notice the Russell last all-time high was in March 15th. All right, so that was almost 3 weeks ago. And, you know, we're holding up, but we're giving up some of this huge rush higher. And the dynamics of Russell basically right now is saying we're in a consolidation pattern. Okay. So that's what I'm looking at. Now, if we look at the tracking stock for Asher, or for China, which is Asher, ASHR, you can see we did hit a low of about 18.61%. We closed on Friday right here, still down a little bit for the week, but for the year, it's horrible. We're down a little over 18% for the year for China. We're well below the 2020 closing price. Okay. So China is not doing good. And one of the main reasons they are growing, but they're talking more about cutting some of their fiscal stimulus, which we're not talking about in Japan and Europe and the United States. So when we do start talking about it, I promise you we will have a reaction in the markets. Okay. And speaking of a reaction in the markets, if we look at our volatility gauge, VIX, you can see here we're back down. We've broken that long-term trend of sitting around 20, and we finally broke it, and we've just started moving lower around the end of March going into April. And as I told our members, once we break it, we're probably going to come back into the green range here on my chart for the VIX, which is roughly around the 15 level down. All right. And that's just going to continue to boost equities for now. Okay. I saw over the weekend where on Friday a big block of buys on VIX calls came in to the tune of about 20 million dollar notional dollar value wise on the VIX calls. So someone is betting over the next 60 days that the VIX is going to bounce up higher. I would not take that bet until after we get through earnings. I think earnings are going to be a blowout. It's going to continue to move the markets higher. But then after earnings, after we get into the summer months, is where I think we're going to start to get some trouble. Okay. But for right now, it's Katie bar the door. Let's bound higher. That's kind of what I'm seeing. And of course, if we come down here and look at interest rates, if we look at the 10-year rate, okay, it's higher, but we're not at the 2021 high. We made that right at the end of March, and then we can see it starting to settle in here. So that's helping the equity markets just kind of get comfortable with this move up off of this low that we had, you know, around 50, 60 basis points last summer, and to where we're sitting right now. So we've moved up a pretty good bit. But like I said, expanding interest rates are not necessarily bad for the equity markets. If they expand very fast, it can spook the markets. And we may see that sometime this summer. Okay. But that's what I'm looking at on interest rates. And of course, if we look at the bond markets here, I was hoping bonds would move a little bit higher so that we could sell into it and sell off going lower. So what I was hoping for. All along here, our members were shorting. I was suggesting to our members, strongly encouraging rather, to just go short bonds or buy puts on TLT. It could be, you know, maybe better for those that don't like to trade the futures market. But it's just been a very low-hanging fruit trade. It's a trade you want to take. Okay, it's good money. But right down here, you do not want to take that trade. I do believe when we get that pullback in the summer months, you're going to see the bond market kind of just move higher, and that'll be a time to look at shorting it, but not right now. You missed that trade if you didn't jump in on it. Of course, if we look at the U.S. dollar, same thing. Dollar is we've made this counter trend move here. Over here, we were short the dollar. It was like, and every time I said it would get to or above the 50 EMA, be leaning short the dollar. And then once we got down here and had kind of this blow off bottom here, and we're getting some divergences, positive bullish divergences in the SPL or the MACD, I'd said that's it, and then let's just move it higher. And that's kind of what we've done. And this was a very overcrowded trade anyway, with everybody in the world short the dollar. So that's kind of where they're sitting right now. I think the dollar is going to go even higher still. And then it's going to start to get weaker. Same thing with a euro. It's going to run a little bit counter to the dollar, because the dollar really is just an index made up of the euro, yen, and pound primarily. You can throw in the Canadian dollar and the Swiss franc and the Swedish krona and others, but really the dollar index is pretty much driven by the euro, yen, and pound. That's about 85% of the dollar index. So that's kind of what I'm looking at right here. And then, of course, if we come down here and look at the metals market, gold's been dead money for a while, as I told our members. Remember, down in this level down here, as soon as we got that cross in the MACD, I suggested play it long, but keep your stops tight. And then it came back down to the double test. We had a cross again, a divergence to the upside. I say play it long up until the downsloping trend line. And you could see here as we hit that 50 moving average right here, it's showing weakness again. I think gold is going to come back down and test this level again. Longer term, meaning out 2-3 years, I think gold is going to move higher. But right now, it's dead money for any kind of long, unless you want to day trade it. Okay. Other than that, I wouldn't touch it. Copper, longer term, we're bullish copper longer term. All right. We got in copper back over here. It was one of the 10 plays I recommended back in April to our members. What I called low-hanging fruit trades, and we've just been long copper riding it ever since. You can see here we're in a longer consolidation period, but I do believe at the end of the year, copper is going to be back up over these levels. It's probably going to be back around 4.5, maybe even higher by the time we get into the end of the year. For now, we're just in a consolidation mode, okay? And you can trade copper with copper futures, or you can trade Freeport-McMoRan, which, by the way, if you want to own the stock, it's also good because they just increased their dividends in Q1 of this year. If you want to collect a little bit of dividends while you're making the trade, you can see how it got a little bit extended from the trend line right here on this daily chart. We just got way extended. So a little bit of a chop sideways action makes sense to me. But longer term, I think it's gonna basically move itself back up. Okay. And then I think my target in Freeport-McMoRan is going to be up here around 40, 43 areas where I see the target. It could be even go even higher. Okay. So I think that one longer term is a good play as well. Okay. In the metals market. Silver, same as gold. It's dead money right now. Longer term, I think it's going to run. But right now it's dead money. I think it may even go lower. Same thing with gold. Energy, well, I think I mentioned to you guys in our weekly roundup here, you should have faded this move. Our members faded the move. That was our recommendation, my recommendation, and boom, it was a good trade right here. So bear call spreads, bear put spreads, either way, do it as a debit or a credit spread, and then away we go. Okay, I think we're going to run sideways here for a while. So, a 2-month out long or a short strangle makes sense to me. Or iron condors. It'd probably be more safe to do it as an iron condor, right? Because then you've got some protection because you're doing it as 2 credit spreads as opposed to just, selling a put and a call in the futures market. I think that makes some sense for sure. Nat gas, back up at this area, it was also a fade the move here too. Anytime nat gas gets over the 3 level, you want to be leaning short, day trading it short, or playing it short, not long, right? And now we're back down here. To me, it's a no trade at that level right there. Okay, I don't see it as a trade. Gasoline, same thing. Again, off these lows here, it was just a really good trade to the upside. Now it's a fade the move. And the ETF that you could track in this is UGA, Uniform Golf Apple. So it's just a fade the move right now. But I think as it consolidates, it'll move a little bit higher, probably more so than oil, I believe. All right, everybody, that's kind of where we're sitting right now. Members, I will see you Sunday night. We got a couple of new stocks that I wanted to talk to you about that I think will do pretty good through earnings. And then we just put on a new trade in our secret trader. If you're not a member of our group, I highly encourage you to come in. We got some trades that have an 80% probability of wins. They're not credit spreads. They work out really well. They're easy to manage. It's like a dividend check, right? And we do it in the indexes, primarily the SPX. So that's what I would highly encourage. And if you got portfolio margin, or if you don't understand it, reach out to me and I'll help you understand it a little bit better. But if you do have portfolio margin, we've got courses and option masters on how best to use that to your advantage. Have a great weekend, everybody. Members, I'll see you this Sunday evening in our weekly market watch. Take care, folks. Ciao now.